Hello, everyone. I'm Shane Vernier, and this is NFP Live. Good morning, good afternoon, good evening, wherever you may be in this fine world. We're going to see the jobs numbers for April. They're getting ready to drop here in about 10 minutes. I think that we're in for a blockbuster number. I don't necessarily know that we're going to hit expectations or beat expectations, but I do know that it's going to bring a ton of volatility to the market, and that is what we've seen throughout 2025. The trade wars of 2025, the tariffs, all of the things that have brought the market dynamic to where it is right now are sort of going to culminate in this jobs number. Now, you say, Shane, how big of a deal is the jobs number? And I'd say, well, most months, it's probably the premier market driver in the world, but sometimes it's a lackluster affair and you don't get much action. Today, we're going to get some action. So in this live stream, we're going to go ahead and we're going to unpack the number for you. We're going to tell you exactly what to expect, what it means. We're going to look at some of the key markets, some of the key levels. We're also going to look at our 5-8-13. We're going to do a little high-impact scalping with the dollar-yen. Right now, I'm watching a 5-minute trade on the dollar-yen, 5-8-13. And then also we've got some 9-20 trades with RSI. We get a lot of great feedback on the 9-20 and the 5-8-13 EMA crossover strategies. We're going to put both of those in play for you today. And then, of course, I'm going to throw some Fibonacci levels at you. If you have any questions at all, be sure to ask. Other than that, I'm ready to go. Nothing better than a big NFP number to get the juices flowing early on a Friday morning here in Dillon, Montana. It's about 6:20 my time. Money never sleeps, but I'm always happy to be on the 6 and love to talk with you guys about trading. If you have any questions at all, be sure to put it in the live chat, drop it on YouTube, or if you're in the trading room, go ahead and put it in the trading room today. So let's see, Euro Kiwi. We want to see the Euro Kiwi. Okay, I'll take a look at the Euro Kiwi here very quickly. Bobby Bob, let's see. Hi, Shane. Thank God it's Friday. It's No Donation Friday. Tuku, good to see you. Yeah, today's one of those days that if you haven't made a bunch of money this week, it's okay. It's okay. But if you have made some money, put half of it in your pocket. Don't go on the hole today trading an NFP number that may or may not be not necessarily to our liking, but extremely volatile. I don't want to see anybody get chopped up. And what happens on days like today is typically you have a great trade idea. You get in the markets. It goes against you. You get stopped out by a few pips, and then the market races in your direction. Unfortunately, I've heard a few folks have reached out to me via private chat in the How to Trade trading room this week and said, I got stopped out by 1 or 2 pips. Then the market reverses. Then, it's absolutely difficult. So we got some folks in the room. Sniper, man. Good to see you, Sniper. Welcome. All right, guys, let's get on with the program here. Remember, if you want to trade any of these trade ideas or if you want to trade NFP next time around, be sure to contact Switch Markets. They'll get you up and running and ready to rock and roll with thousands of markets. You can get funded in 3 easy steps. It's relatively straightforward. If you're an international client, be sure to check out Switch. If you're here in the United States and you need a Forex out, we sort of recommend Owanda. Owanda's a pretty good outfit as well. So if you're in the United States and you need a futures broker or a Forex broker, How to Trade, swing by, send me a private message. I'll do my best to get you lined up and ready to go. Let me see, Gregory. Hey, man, I'm following from Ghana. God bless. Ghana. Wow. Well, thanks for tuning in, Gregory. It's got to be borderline evening time where you're at. So I'm bright and early. I just rolled out of bed about an hour and a half ago. I'm ready to go for NFP. Nathan Adams, US 30. Absolutely. We'll look at the US 30 here in just a second. So Euro Kiwi and the US 30. Okay. Remember, NFP is going to be your basic jobs numbers. That's all it is. Forget about the rest of the nuance. Forget about everything else. It's just a measurement of jobs. How many jobs are we creating here in the United States? A lot of jobs tells us that we're growing. Few jobs tells us we're contracting as an economy. That's key. Remember, the old saying is when the U.S. sneezes, the world catches a cold. Well, pretty much everybody in the world's watching this number right now, and they're trading it. And remember, when we talk NFP, it's all about relative analysis. Always remember that we're going to grade this number based on the projections and the previous release. That's absolutely imperative that we understand that. How does NFP impact the Forex? If it's above expectations, it's going to be bullish for the USD. That suggests we're in a growth cycle. The Fed can actually raise interest rates. But if it's below expectations, or if you see a falling NFP, that's dovish for the USD. That's bearish. That means that the Fed's probably going to cut interest rates to try to stimulate economic growth and get everybody to work. How does the NFP impact equities and commodities? Remember, it's exactly the opposite. If it's above expectations, it's going to be bearish. Stronger dollar means that things like gold and oil typically come down. And if it's below expectations, that means that risk assets, crude oil, gold, it's all off to the races. Now, U.S. non-farm payrolls, just ignored my headline there. Previously was 228. Today's 138. Unemployment rate's at 4.2%. That's what we're expecting. And nothing really too huge here. Remember, these historical moves are definitely things of the past. This was the COVID craziness. You could see that the COVID jobs number pretty much messed up the unemployment metric for a good 2 years. Nobody knew what the heck was going on. We still don't. But the financial crisis of 2008 to 2012, a lot of people believe that we're going into something very similar to that. I was there then. And the unemployment rate here in the United States was almost 8%. You couldn't get a job if you wanted one. So definitely a difficult thing. And then revisions. Revisions are going to be absolutely huge. It's the last paragraph in the report. We're going to go over that together when it drops in about 5 minutes. Okay, guys, enough of me rambling on about what NFP is. You guys know what NFP is. It's a jobs number. But we're going to go ahead and then we're going to see if we can find a trade or two. Let me see. Got a lot of folks. I'm way behind on the live chat. Sheldon, good to see you. NAS 100, absolutely. Let me see. Bonky, hello, sir. I'm Pablo from South Africa. Good to see you, Pablo. Welcome. I've never been to South Africa. Never been to Africa. I heard good things. Here it's an absolutely beautiful country, or continent, excuse me. I've just never been there. Following from Nigeria, all right. Is a US 30 like a Dow Jones or a SPY? Is it an ETF? US 30, Angeli, is it's a CFD product. So the US 30 essentially is like a futures contract. It's an E-mini. It's basically a takeoff of the E-mini Dow. It's not an ETF. It's not a SPY, anything like that. US 30 buying or selling, Nathan? All right, we're going to dive into the US 30. Let me see. I am. Hi there. I'm from India. Right on. India. We got India. We got South Africa. We got Nigeria. All right. Good stuff. Good morning, Shane. Not trading the NFP today, heading to Omaha for the Berkshire Hathaway meeting. All right, Jarrett. You can't beat that. I mean, yeah, man, I wish I had about 50 shares of that. A little Berkshire, a little 50 or 100 block of Berkshire. That would make me smile a little more. I don't. Let me see. Buy or sell for gold. Okay, I'm going to go ahead and take a look at gold as well. Are we buying the NAS? Let me see. Jerusalem, good to see you. Hello there. Hello there to you. Okay, guys. Lita, always a pleasure, Lita. Okay, let's get on with the program here. We got about 4 minutes until the number drops, so let's look at some charts. Let's see if we can get a couple numbers out. This is a trade idea that I had out earlier this week, 112.50 in the Euro USD. Absolutely love it. It was a near miss. We had 60 buys. We came down right around 112.65. This is a pretty interesting level. I think it could come into play. We're about 80 pips off, so keep a close eye on that 112.50. In my view, that's going to be a bid for the Euro USD as soon as our number drops here in about 3 minutes. Gold. Is gold a buy or a sell right now? I don't recommend being either. I don't recommend holding longs or holding shorts. Right this minute, if I had my ruthers, you say, Shane, what are you going to do? I would buy it. I would be long gold going into this. But remember, deep pockets. It takes deep pockets to ride out something with the turbulence of an NFP number, and you definitely don't want to force it, especially if you're a retail trader. All of us are retail traders. That means that we have limited funds. However, we have a big advantage over the big guys. We don't have to trade today. I'm not planning on it. I'm going to let the dust settle. I want to see exactly what happens today. And then Monday, I'm coming in, I'm game planning, and I'm going hard Tuesday, Wednesday, Thursday. We'll be back here in the trading room for all the action. But right there, 62%. 3175-ish is a level that I really, really love. I think that if we get an opportunity to bid that in gold, you're going to be in a great spot. Now, what exactly does a weekly chart do for us there? Shows us the macro situation. Now, you'll notice the daily been very, very sort of, I won't say quiet because the daily ranges have been significant, but it was sort of really choppy right up here, right around 32.92, and then we got the big sell-off, and then you got sort of we bottomed out right around that 50% retracement. I'm still looking at 31.75-ish. I think we have a shot there. Again, that's about $75 down the queue. Probably not going to get it today, but maybe tomorrow. Do you want to be long or short right now? Well, gold's up about 0.63%. I would say that I would want to be holding longs if I was doing it, but be very, very careful. And when we take this right down to, say, a 1 minute chart, which is what we're going to be doing here in just a second when this number drops, you can see that we've got good action, but we're not really much of anywhere just yet. Not much of anywhere just yet. So we got Euro USD, dollar yen. We're definitely looking potentially. We're going to take our time frame way down here in a second, but you can see right now a little bit of bearish pressure on the dollar yen. We've got this 5-8-13 strategy we're looking at. It's going to be an interesting strategy. I think we're going to be in for some pretty good trading right there. So the dollar yen is definitely on my radar. US 30. The real question everybody wants to know, Shane, what do we do with the US 30? And I would say be very careful. Be very, very careful with it. You don't necessarily want to get in a situation where you're what I call pot committed. Now, you had a negative month, new month. We're up a little bit this month, about 0.5%. Anything can happen. So what I'm going to wait completely on this US 30. I think that it could be a big mistake to try to rush in and make something happen. But we are going to look at it, say, on a 1 minute chart and see exactly what this number does to price action. Let me see. I'm from, I have no idea how to pronounce that, Kalash. Good to see you. I am Always a pleasure. You didn't mention Uganda. Samuel, good for you. You're from Uganda? Let me see. Kalash, I'm from Dagestan, Russia. Welcome, everybody. I will mention Uganda. My fault, Samuel. I didn't mean to forget. Okay, here we go. The number's going to drop. We're going to go ahead and see exactly where we're at here with this US 30. This is a good market as any to watch as the market drops. Remember, as we get the big volatility, be very, very careful, at least for a minute. Okay, where are we at? What happened? Holy cow. Gap up in the US 30. Now we just have absolutely crazy price action. Look at this gold trade. Gold trade's exactly the same. Just absolutely huge participation. That's one of the reasons why I absolutely do not favor. I just do not favor trading that first minute, maybe 2 minutes after the employment report. That's absolutely huge. If somebody's got the number, yell it out in one of the live chats. Bobby Australian, good to see you. This is an interesting type of a thing right here. Got a big bearish move there. That's going to be sort of bullish for the U.S. dollar. Dollar goes up, things like gold go down. And right now we're coming off in a big, big way, and we've got to get ready for our macro levels. These are the trades that we want. 31.75. I'm watching closely. This market is absolutely cratering. 1 minute, we're off about 0.25%. That's absolutely huge. Big time volatility here in the gold market. Be very, 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 very careful if you are trading gold right now. We're going to do a little high impact scalping in just a second. 177,000. Calvin, good to see you. Calvin, always welcome. 177,000. So we beat our top side. We beat 138 is our expectation. 228 was the previous release. I am interested. I want to see exactly what the revisions are, and I've got the report right in front of me. Let me see. Total non-farm payroll employment increased by 177,000 in April, and the unemployment rate was unchanged at 4.2. I would have lost that bet. We were looking for a much weaker jobs number. This is a strong number. This is a strong jobs number. We were anticipating a big miss, a big time decline, and we just haven't seen it. And I'm going to go ahead and take a look at the revisions. I want to see the revisions. Remember, the devil's always in the detail in these reports. And the revisions, last paragraph of the report are huge. We're going to go over that in just a second. Mark B, 177,000. Okay, guys, right now we've got a full minute range that's just set up. Now we've got the retracement. This is indicative of what happens every single time on these numbers. You get the big sell-off, and now you've got the reversal. So what's happening? The retail, algos, everybody piled into the short. They piled into the short side of gold, and now the market's really testing their mettle. Are you going to hold? Are you going to bail? Are we in for a full-time reversal? What's going to happen? It's tough. Everybody that was holding longs, like we talked about before the number, hey, I want to be long, I want to be long, I want to be long. Well, that's fine. That washout right there destroyed the longs, destroyed retail longs. Now you're bouncing. It's really testing the shorts. What's the right side to be on, the long or the short? For today, I probably want to be short now. I have a long-term bias, top-side bias towards gold, but right now, this type of price action, you can go broke very easily. So with what I do, not necessarily the best thing to be doing Fibonacci's-wise, with these type of market structures, but something like that for the US 30, 41.42, probably a nice high impact scalp right down there, 38%. We're sort of betting that potentially you could get maybe a runner to the top side. I think this is highly risky. I fully believe that this could happen right here. That gap up. And a lot of that's the market makers manipulating the CFDs and how exactly the spreads work. But a lot of this right here, this void right here, always remember this about markets, guys. There's 3 rules. Gaps get filled, and gaps get filled. That goes back to Stadelmeyer in the 1980s. That goes back to price discovery, always seeking a level, and area fair value. US 30 probably comes off. If you were scalping right from 38%, I would be concerned. You got a nice little bump there, but I don't think it's going to last. If I want to do it, if I was doing something right here in the US 30, it probably would be to the short side. So we can go right here. We can pull up our paper trader, pull it up and see what we got. Do we want to be long or short? Interesting. I would just send them short. Let's go ahead and sell the market and see what happens. Now, to take a trade like this, number one, you're gambling because you don't know what price is going to do. We went right down to 50%. The pressure is definitely down. But if you do make a trade like this, you're anticipating that we fill this gap in down here, and we do it relatively quickly. Now, the only thing that makes a trade is having 3 parts. You've got to have 3 parts to every trade. Number 1's got to be your entry. Number 2's got to be your stop loss. Number 3's got to be your profit target. Those are the 3 facets of any trade. And as long as you have those 3 things, I would never eat anybody's lunch and say, oh, that's a bad trade. Oh, you don't know what you're doing. I would never say that. I'd say, listen, if you have a target, okay, we've got a target maybe down here, 78%, somewhere in there. Do I have a stop out point that's legitimate? It's got to be up here above this swing high. How's my market entry? What do you think about my entry point? It's not very good. It's not very good. This is a complete impulse trade. I probably should have been selling right up here. Once I saw that hammer would have put us in a much better position. We would have been selling from up here and stop ourselves out up here. But right now, we're trying to get that gap to fill. Most of the time, when you see a gap like this, especially if we're looking at a 1 minute time frame, you're going to fill it in. Now, the real question is this worth our time? It's tough, guys. Making trades like this work consistently is very, very difficult. I'll put it on just because I want to execute a trade, and we're going to go ahead and do it. Remember, these are demo dollars. It's a heck of a lot easier just to send them short on a demo than reach into your own pocket and spend your own money doing this. If you are, in fact, going to be trading today, you take a heck of a lot more care than I just did. But we can build a trade. The trade's there. Horizontal line, bang. There's your stop out point right above the swing high. Where's going to be my profit target? Right down in there. Is it worth it? Not really. Something like that maybe. That makes it worth it. About a 1-to-1 risk versus reward. You got to hit a lot of those trades to make it worth your while, and it looks like we're going to get swept out of this one. The market structure, I don't care for it right now. We're going to let that one simmer, though, and see exactly what happens. Dollar yen. Now, right there, this is a good example of our 5-8-13 strategy in action. What you have right here is you've got your 5-minute bar. That's going to be your news bar, your NFP. Big-time rally right there. Okay, sort of a little hammer formation. Now, according to the 5-8-13 rules, very, very simple. The red one's the 5-1. That's our trigger EMA. That's what gets us into the market and out of the market. Bang, right there. What do you got? You've got a crossover. The 5 crosses over the 8 in price. The price bar closes above all 3 moving averages. So something like this is going to get you into the market. So what's the position? You long or short? You're long. Why? We're getting killed on that other trade. Why? 5 crossed over the 8. Price is above all 3 moving averages. Go ahead and buy the market. Buy the market. You probably wanted to do it right on the close. That's okay. Now remember, the big thing you got to remember with a crossover strategy like a 5-8-13, especially if you're a scalper, is your stop loss location is going to be everything. Absolutely everything. What do you want to do? Right beneath that swing low before the NFP report? That could be your anchor. Now listen, high risk trade. The trades that we've just taken today are high risk. There's nothing easy about any of this. The reason why is because we got that big flood of participation. The markets went absolutely crazy, and now price is trying to find an area of fair value. All we really have to go on here on a 5-minute chart, US dollar yen, is what? We've got a technical indicator that told us to go long. So in order for this trade to really work, our stop loss is down there about 144.39, not very far away. You're going to have to get at least a 1-to-1. I would have my profit target up here, maybe being a pure day trade and seeing if I can get a rally maybe up about 60 pips or so. But right now, this is indicative of NFP trading. We're seeing just chop city. You can see our US 30 is going to stop us out. Very difficult to make trades like this and make it work for you long term. And then right here, this one's going against us as well. Do you guys get a common theme of what we're doing? If you're trading right now in these volatile environments and you're not playing off of maybe a macro level, like we outlined before the number dropped, you're going to run into trouble. Almost guaranteed you're going to run into trouble. The reason why is the market's very, very choppy. Like I said, I'm not putting real money at play right now. No way. I want to wait. I want to wait for that U.S. Open. I want to wait for everything to settle down, and then potentially we can get in there and maybe make a play or two and make a little bit of money. That's what it's all about, guys, is being patient. This trade right here, this could be a pure day trade, but once again, you're going to have to get a 1-to-2, 1-to-3 to make this US dollar yen 5-8-13 worth it. Maybe this was where we break for the day, or maybe we get chopped out. Very, very difficult to say. US 30, we're out of that. We're definitely out of that. You got to go ahead and flatten that. 1 minute chart doesn't get much riskier than that. Got stopped out. Could the market reverse in our favor? Of course it could. I'm not going to wait around to find out, though. Incredibly difficult trading. That's for sure. Let me see, Eli, wise words from a wise man. I don't know that I've ever been called wise. I will tell you this, very, very dangerous right now. Gold is a mess now on the 1 minute chart. Absolutely, Calvin. If you take a look at this is a good one. I was watching a young lady trade the other day on YouTube. There's a lot of folks that are in there trading, and she was trading futures. She called that a barcode. That type of chart sort of looks like a barcode, that you see on your, anything you buy has got a little identification, a barcode. That right there is a very, very ugly chart. You're trying to get a breakout, but, do you break to the bull? Do you break to the bear? This is problematic. Very, very choppy, guys. Indices continue to climb. Absolutely, Calvin. You're right. Mark B, How are the gold trades? Oh, yeah. I think the gold trades are probably going pretty well for Calvin. He typically does very well on gold. Let's see. There's your break. So what do you think now? Let's take this down to a 30-minute. I mean, that's absolutely brutal trading, guys. Absolutely brutal trading. What's going on with Bitcoin? Take a look at Bitcoin here. Daily chart. Bitcoin's going towards 100,000. You can see right here. Here's our 920 crossover coded. There was your bid. You're looking to bid back at 85. That was a pretty good trade. The question we go to now is what's going to happen? Are we going to just stall out at 100,000? Are we going to test 100,000? I would almost guarantee. I can't guarantee. I can't talk like that. But you're going to go to 100. You're going to go to 100. More than likely 96.9. You're going to print 100 probably this weekend, I would say. But that's a 4 or 5% gain. Do you buy 96s? Absolutely. Very, very difficult to say. Very difficult to say. All right, let's take this down to a real short time frame. Take a look at NQ. I got a lot of people online were getting after me the other day because I was scalping a 15-second chart on the NASDAQ, the E-mini NASDAQ, using this 920. And you can see right here, there's your initial break, pullback, break. Now you're just waiting on a crossover, essentially. Do we believe that the indices are going to come back down? More than likely. I don't see them really holding this ground, not with that jobs report. I don't see that happening. But for right now, ultra short time frames, it's risky. It's very, very risky. In any case, this is going to be our 920 crossover. For those of you that don't know what I'm talking about, we're waiting for the 9 to cross under the 20. It's going to give us a nice purple bar, and we got the trading panel again. It's funny because you get disconnected on these things, and all right, right there's going to be your short. So your short trade right there is going to be interesting. We go in and sell one and see what happens. Market bounces against you. Where would my stop loss be if I'm executing a 920? Where would it be? Right there. Right above the previous swing high. Doesn't look good. We're getting thrashed. Like I said, this is incredibly risky trading, guys. A lot of times you'll have the best market calls in the world, and just the price action itself is just not going to lend itself to you making any money. Look at this dollar yen. Chop City. It's going to stop us out there again. Bam, flatten it out. 2 losers in a row. Doesn't happen often. It has. Why? Why have we lost so far? Because we took a stupid trade here trying to figure that we were going to fill in on this US 30, and then our crossover trade just hasn't developed. Now what do you want to do? Do you want to go short here? 2 minutes and 36 seconds, you're going to get that crossover to go short. Can anyone else see what's happening? The markets don't have a direction. You're getting chopped. This happens almost every time on these news reports. You get chopped. That right there killed the longs. The reversal killed the short-term longs. This initial spike off the NFP killed everybody that was short. That's why these things are so hard to trade. They're so hard to trade. If you guys wanted to do me a favor, you'd wait a half hour before you started trading. You'd wait until the U.S. Open in about 45 minutes. Let everything simmer down, calm down, and then we're going to have some nice ranges to work with. This is challenging, guys. Challenging. Indices are flattening out. Here's our NQ. Clearly, we're going to get chopped up again, it looks like. Absolutely nothing happening here. If you wanted to keep your stop loss there, you could. If you wanted to be hyper aggressive, you could tighten it right up there to that swing high. The idea being you want the market to go right now. I'm not real big on it. I'm not real big on moving my stops. I would just, probably leave it right there and really look for this to sort of be the end of the retracement and to make another leg down. But hey, listen, this trade's been negative since we took it. I can tell you from experience, trading when you're at your best is easy. You just reach into the market and you take the money. It's easy. And when you start seeing losers stack up like we've had today, it means something's really wrong with the market. It means that it's not right. Something's not right. Now, each one of you have got to develop that intuition in your own mind. You've got to sit there and you got to go, something ain't right. Nothing I'm doing's working. My crossovers aren't working. My market profile stuff's not working. Get out. Come back Monday. Come back Tuesday. That's what I'm going to do. Is this trade dead? Yeah, we're going to lose it. We've already lost 2. You're going to lose that trade, almost guaranteed. Why? Because the markets have no direction. If you don't take anything else away from this live stream, the markets, when they don't have a direction, you're going to get hurt. And the biggest part of being a trader is knowing what to trade and when to trade. Right now, I highly recommend getting away from all of it. Put it down. If you're in Dillon, Montana, or if you're in the Mountain Time Zone, go to sleep for a few hours. Come back later. See if you can get a late day trade after everything settles down and you have an opportunity to trade with a little bit of confidence. This right here, we're going to get stopped again. That's going to be 3 losers in a row. Maybe not. Maybe it comes back our way. Who knows? Tough to make money right now. All right, we did have some requests, though, before I go over the revisions here. We had somebody that wanted to see the Euro Kiwi, I do believe. Let's go ahead and look at the Euro Kiwi. Okay, absolutely falling out of bed. This is interesting because what you have is you've got a pair here that doesn't deal with the dollar yet. You've got a big time move, and the reason why is because right now the Forex is going absolutely crazy. So what we're looking at doing right now is stepping back. Always, the first thing that you would like to do, pretty much that I do, almost religiously, is to always step back from 10,000 feet and say, okay, is there a big time level that I can hang my hat on? Okay, if I'm trading the Euro Kiwi, I'm definitely looking at 62%, right around that 188 and 3/4 handle, 189 maybe, 180, 189, somewhere in there. Could be pretty good. 188.75s, probably playing those to the long if in fact that does come into play. That's what I would say. Definitely the breakout. The question is this a trend or was this just sort of a flash breakout and a little bit of a reversion? Hard to say. Really hard to say. I think there's an opportunity there potentially to grab a bid, but we're not necessarily certain. We're not necessarily certain just yet. 3-week losing streak. There was the big action. You can see that doji. It's funny when the volumes spike, a lot of times you see the doji really coincide with heavy volumes. And when you do see that, just have that go off in your head and say, okay, what does a doji mean? That's a candlestick formation. Looks like a plus sign, an addition sign. What that tells us is the market has no direction. The buyers and the sellers have fought to a stalemate. Price is sort of not really doing much of anything. Right now we're selling off and we're coming back down. We've got an interesting level right there. That's the one that I would be keying on. And as far as your weekly, you also have a 13-period moving average, a 13-week EMA right there at 189.33. You've got something right in there between 189.33 and 188.82. That would be a big-time support zone for me. So if, in fact, you're interested, that's probably going to be your bidding area. Of course, if that level doesn't hold, you got to get out. All right, let's go back and take a look. What's our NASDAQ doing? What's our NASDAQ trade? Of course, we're getting stopped out. Go ahead and flatten it. Now, this is a good illustration. 3 losers in a row. We're trading all sorts of different strategies. What would be the number one thing you would do right now? Real money in your mind's eye if you're a trader. What are you thinking right now? I pack my stuff and go home. That's it. It's not going well for me today. And if it's not going well, you don't trade. You don't trade. That's easy. That's a decision, though, that's really, really difficult to make. A lot of us can't make it. Right there was our sell. Okay, got chopped out, stopped out there. But look, you also had a buy show up right there. So we're just the wrong way. We're the wrong way here. We missed this trade, which was where the money was. Why would the indices be moving right now? Your jobs number came in better than expected. The indices should be heading down, yet they're heading up. Get out. Stay. I can't tell you guys what to do as traders. And they want us to always tell you guys to trade. I can't say that in good faith to anybody today. I can't remember the last time, like in my own trading with the Fibonacci's and the market profile and my range numbers, I can't remember the last time I lost 3 trades in a row. We're talking years. So be very, very careful with what you do. Some games you can't win. The only thing that we've got going for us is we're smart enough to cut these losers off. Cut them off. Don't lose all your money in one place. This right here, this Japanese yen, that's a brutal chart. Look at this 30-minute bar. Good luck with that. Know when to hold them, know when to fold them. Last thing you want to do is lose all your money on a day like today. Save it for next week. If you sit there all week next week, almost guarantee you're going to roll into Friday feeling pretty good about yourself. If you lose all your money today, you can't trade next week. Tough lessons. The market of a trader is not necessarily what you do when you're winning. Anybody can go buy cars and go on vacations and buy everybody dinner and give lavish gifts when the money's rolling in. It's what do you do when times get tough? What do you do when you just lost 3 trades on 3 different approaches on 3 different markets? It means that things aren't going well. To have the discipline to not trade and stop will be something that'll keep you in the game for a long time. Because remember, there's an old saying in American football, you can't win the game in the first quarter, but you can damn sure lose it. You don't blow your trading account out in one day. You don't blow it out on one trade. If you find yourself thinking, oh, I'm just going to throw it all down and see what happens, you've already lost. You might as well just take your money and light it on fire because it's already gone. With that mindset, you're going to lose eventually. However, show up to the market ready to go, rested and ready to go. You've got your account. You've got what I call ammunition. You've got plenty of your powder's dry. You're ready to go. Then you have a chance. Remember, profitability is just a function of time and money. Preserve your capital. Put the time in. You're going to be just fine. What you do is you don't go on tilt and you don't blow your whole account out. You can't do it. Let me see. Let's see, Bobby Bob. According to today's NFP, is the dollar strong or weak? Well, we're going to look at the actual report here in a second. We're going to make a few judgment calls. The dollar right now is back beneath. Let's go ahead and take a look at the DXY. Let's go right here. Dollar index. You can see we're trading right around 2023's low. Got to go way back for that. Excuse me. Sort of a zone that it got a lot of traders involved, I can tell you that. And we've been here right around this zone for, 3 weeks now, 4 weeks. It's not an accident. There's definitely bidders there. We believe that, maybe 100 is long-term support. Excuse me. But the trend's definitely down. What does today's jobs number do to the dollar? I don't think it's going to do much. It's not going to have an impact either way. It was a stronger than expected figure, and we're going to go through the numbers right now. Theoretically, that's going to be hawkish for the dollar, meaning maybe the Fed doesn't cut interest rates as soon as we think they are, but I just don't believe that this jobs report's going to have a whole lot of bearing on the dollar in any sort of meaningful way ahead of, I believe, next week's Fed meeting. So I don't – this is what I would call probably a throwaway number. I don't think that this jobs number is going to dictate much. We were really looking for a big miss to the downside. Most of us thought that you're going to see an incredibly negative number. Didn't really see it. Saw sort of a strong number. We'll go over it in just a second. If I'm looking at the dollar, though, I'm definitely aware of what the trend's doing. Right there, Trump took office 20th of January. The dollar has been the biggest casualty. There's no question about it. So right there, you're sort of rotating around a little bit. Now you're looking to bounce. This is just really – I'm not an Elliott wave expert. I know we have one in the room. But look at that. You go right up to 38%, right around 149 there, and you're still coming down. It's bearish. It's definitely a bearish look. The technicals are bearish. I think once 2023's low's gone, you're probably going to trade down there, 92, something like that, 93. Good question, though. All right, let me see. Mark B. Let me see. Eli, I'm short on the Great Britain pound Australian dollar. Right on. 3 losses, call it a day. 100%, Calvin. No, that's what you do. Run away. Absolutely, Kevin. Hey, listen, I love to trade, and I'm more than happy to sit around and try to pick trades. But I'll tell you what, one of the things that I was taught right away, just a quick psychological lesson, then we're going to go over these numbers. But my mentor was my uncle, Gary Vernier. He brought me in, and he was a big shot on Wall Street. He was a big shot for Shell Oil, and he traded. He was an upstairs trader, actually, for some big firms. He made the transition, from the pits. When all the pits, the open outcry went away, everybody went to the screen, the screen like you have in front of you, like you're watching the charts and everything. Pretty much everybody lost. All the pit traders, all the old pit traders, they had an incredible skill set. They were like poker players. They could read the pits. They could read the angst. They could feel it. And I had the opportunity to really trade alongside of a pit trader that was a millionaire, that made millions of dollars in the market. And he was sort of really struggling on the screen. And he would talk about the pits. He said you could feel it. And what that was, those are just people skills, being able to read people, understanding when there was a buzz in the pit, this price is probably going to go up. And they just and then it was just about managing risk and throwing the money down and just showing up at the end of the day and taking the money out. The screens are much, much different. Much, much different. So to bring you back full circle, what I learned about risk management was from my uncle directly. He said, listen, this game's entirely about money management. You can make an absolute fortune in the markets, but you can also lose all your money very quickly. And if you lose all your money, you can't trade. So the idea was to always preserve your capital, number one. And then number two, he said something to me that was interesting. And this is a guy that had been in the markets for 30 years at that point, 30-something years, really to the beginning of the crude oil pits. And he told me, he said, listen, you know, when I show up in the morning, if I lose right away, I'm pretty much done. So he would show up and he'd place a trade. He goes, when I lose, if my first trade's a loss, I'm pretty much done. From his experience, it got worse. It got worse. And what I'm telling you is, yeah, today we took a bunch of trades because I wanted to execute some trades and show you exactly what it is to trade something like this. But when you find yourself with a strategy and you show up for work and you're ready to go and you're optimistic and you got your market reads and you got everything going and you lose, it probably is not going to get any better. Probably not going to get any better. Now, I can tell you from my experience, really does mirror what he was telling me. He said some days you show up and you lose, shut it down, come back tomorrow. That's one thing we don't understand is people, really. Most of us, we work full jobs. You work 9 to 5s. You work a long time, put in these long hours to get your paycheck. We really can't suspend the idea that time is money. In the markets, it's not necessarily true. I mean, in one respect, yeah, every minute that you have an open position, it's money. Okay, I get that. But you can make more money by getting hot on Tuesday than you can trying to, I mean, let's say right now, okay, we're 0 for 3. Let's say we're down 1,000. I could sit here the rest of the day and try to claw back to break even. Is it worth it? Not really. Why? Because if you keep losing, maybe that 1,000 turns into 2,000 or 3,000 or 4,000. Then you're out. Always remember, it's not worth trying. It's not worth fighting to try to get back what you lost. Get a tourniquet on it. Stop the bleeding. Come back when the game is talking to you, when it's easy. Remember that. Trading should be easy. The trades should come your way. You should see them and execute them. If you find yourself gritting your teeth and really struggling to get profitability, you're in big trouble. You just stop. That's all you do. Next week, FOMC Wednesday, Euro USD prognosis. All right, we'll look at that one. Indices continue to climb. Oh, yeah, this is an interesting dynamic. All right, we've already sort of gone over the Euro USD. I'm going to do that, and then we're going to hit the numbers, and that's going to be a wrap for this morning. I've gone a little bit long, but I think it's really a great opportunity to talk psychology, especially in these markets. I am very careful with this. As far as the Euro USD goes, I'm relatively confident that this long-term level right here, you know, we sort of already tested it right around 112.65-ish, and then we bounced. Still love 112.50s. I think that 112, I believe we have a 112.60 buy-up as a potential trade idea. I would be looking at that is not being a bad idea, potentially. Check out our trade ideas inside of the trading room if you're interested. But what I would really like to see is a big sell-off in this. I would love to see the dollar rally a little bit, give us an opportunity maybe to buy 110.50s. That would be a real strong trade to back into this golden zone. But I love this wave count right here. This right here sort of got a long period of compression and then a break and then a pullback and then a break and then a pullback. What does that mean? Typically means you're going to make another leg higher. But where do we stall out at? When's the pullback over? I would love to see it sell off down there into the golden zone. Euro USD is definitely on my radar for next week, as is sort of Netflix. We're watching Netflix real close. We had a 920 crossover that was an absolute banger. We talked about that, wrote it up for you. Pretty good stuff. Tesla's got a 920. A lot of folks talking about Tesla. Do you want to be long or short Tesla? Probably take a shot to the long. Nice big buy, 920 crossover on the daily. Got a chance. All right, let's take a look at this report, and let's go ahead and call it a day. Been sort of a challenging morning. I am confident everybody stayed off those landmines. Everybody's in the green, or at least at scratch. All right, this is the U.S. Bureau of Labor Statistics Employment Situation Survey, April 2025, Dateline, Trade War 2025. Total non-farm payroll employment increased by 177,000 in April. The unemployment rate was unchanged at 4.2%. So basically, not much happened. Employment continued to trend up in healthcare, transportation and warehousing, financial activities, and social assistance. The federal government employment declined. It's funny how they put that sentence right in there. It's the Doge cuts. Remember that the folks that do this work for the Bureau of Labor Statistics also work for the government, so they probably had some friends that were laid off or something. Very, very short, succinct sentence. Federal government employment declined. It's going to keep declining in the short term. Long term, I don't know. We'll see. See what happens. Remember, when you're reading a jobs report, there's a couple of things. That's the headline. That's what everybody's going to talk about. You're going to watch the news today. Everybody's going to be lauding that. You'll probably hear something from the Trump White House saying, oh, we created all these jobs and the economy's going. You need to go to the last paragraph. Absolutely imperative that you understand what the last paragraph is. This is where they revise the past numbers. This is indicative and can tell you a lot about where we're at numbers-wise. The change in total non-farm employment for February was revised down. That means February's numbers were worse than we thought. 117 to 102. The change for March was revised down by 43,000 from 228 to 185. With these revisions, employment in February and March combined is 58,000 lower than previously reported. This was a trend throughout 2024. Downward revisions. That means the jobs market's a lot worse than what we think. Remember, we're not creating 300,000 or 400,000 jobs anymore. You're down to about, 138 was what we expected. Came in at 177. I would expect next month for this number to be revised down too. So what you have here is sort of a weaker than what we thought job situation, which is probably why we're getting a little bit of a bump in the equities. Doesn't necessarily mean that you're going to get any rate hikes. You're probably going to get a rate cut. And we're going to wait and see exactly what happens with expectations today with our interest rates. But that right there, even though it looks relatively strong and you beat expectations, with those revisions, it ain't the best number in the world, guys. It ain't the best number in the world, and I think it's going to get worse. That's for sure. All right, everybody, I'm going to go ahead and sign off. I've rambled on long enough. We sort of had a psychology session here today. I always lean into the losers. Remember that. Lean into your losers. When you lose money in the markets, you're paying for information. You're paying for information, and learn as much as you can from your losses. What did we learn today? We learned that this is a highly volatile situation. It's choppy, and the markets don't have a direction. I don't see anything on the board right now that tells me that we're going to get a trend day. If, in fact, you got on the right side of these indices moves, I believe we're up about, 1.5%. Be very, very, very careful going into the U.S. Open in about 28 minutes. You could definitely get a reversal. All right, absolutely, Lita. Always my pleasure. Great to see you guys. I think that it's going to be a great week next week. We'll be back for FOMC Live. We'll have all the coverage for you there on Wednesday. I think it's going to be a blockbuster week. There's going to be a lot of headlines, a lot of people talking, and I think that Trump is going to be getting after Powell, especially when Powell doesn't cut interest rates. He's not going to cut them next week. He's going to be sort of hawkish, and if that's the case, you're going to see some real headlines and some fire. I can't wait. I think it's going to be a lot of fun. All right, everybody, absolutely. Kevin, always a pleasure. Eli, absolutely. Eli. Calvin, always a pleasure. Calvin. All right, guys, I'm out. You guys have a fantastic trading session. Have a great weekend. We're going to see you back here next week. Be sure to check out the stream schedule. If you need a place to trade, check out switchmarkets.com. If you want to talk to me personally, head on over to How to Trade. Send me a private message, and I'll get back to you in short order. All right, guys, that's a wrap. Have a fantastic NFP day. If you made a bunch of money on that NFP, be real careful. U.S. Open's about 27 minutes away, and fortunes can shift hands. They can change hands relatively quickly on a day like today. Be very, very, very careful. I want everybody ready to go on Monday, ready to go on Tuesday. I can't tell you what to do. You got to manage it yourself, but be very careful today. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.